How's everybody doing? This is Bob Iacchino from Path Trading Partners, along with my co-founder Mike Arnold. It is August 20th. This is a Path Chat weekend update covering individual stocks, individual equities. And before I turn it over to Mike to let you know what he's seeing on the charts, I just want to do a quick earnings scorecard with 91% of the companies in the S&P 500 reporting actual results for the second quarter of 2017. 73% of the companies have reported positive EPS surprises, and 69% have reported positive sales surprises. Now, of the remaining companies, 9% have reported actual EPS equal to the estimate, and 18 have reported EPS below the mean estimate. The percentage of companies reporting EPS above the mean is above the one-year average, which is 70%, and above the five-year average, which is 68%. Earnings surprises, 6.1%. So in other words, of the companies that did surprise to the upside, those beats were by an average of 6.1% higher than the estimate. That's also above the five-year average. And in aggregate, you have a blended earnings growth of about 10.1%. So double-digit year-over-year earnings growth led by energy, information technologies, utilities, and the financial sector. 10 sectors have reported year-over-year earnings growth. Now, in terms of earnings guidance for Q2 2017, 59 S&P companies have issued negative EPS guidance, and 35 companies have issued positive EPS guidance for the third quarter. The rest issued nothing at all. Valuation, the forward 12-month PE ratio for the S&P 500 is now 17.4%, and this PE ratio is above the five-year average and above the 10-year average. Five-year average is 15.4, and the 10-year is 14. You'll hear a lot of people say that the market is expensive based off of these particular statistics. Now let me just go ahead and give it over to Mike just to let you know what he's seeing on the chart of some of the stocks we were watching. Mike, it's all yours.
Thank you very much, Bob. Tesla, double bottom that came up and hit the stop reduction zone right here, right around this 369.97 area. It's now formed this double top. So this triggered on Thursday, and the targets for that stop reduction, 345.43, first profit target 341.33, and second target 337.24. Now on this double bottom, when it did hit stop reduction, the stop for this would be a close below 330.86, would invalidate that. Google, just something we're keeping an eye on. This is a very nice double top, and the rotation zone would be out of the way. It would trigger on a weekly close below 894.79. So just pointing that out. And quickly, Oracle, one that did trigger. I'm following it on the weekly basis. It is going against the rotation zone, so it's lower probability. The rotation zone right now is sitting at the stop reduction target. That is sort of interesting. This last week, it didn't do much. It rallied back up, but it pretty much is unchanged. This week gave really good risk-reward entry for this double. That's all we have for you on this quick weekend stock update. Back to you, Bob.
Thank you for that, Michael. Please hit like and subscribe if you like what we're doing. If you're interested in a weekly review and then a preview of what's coming up this week with Jackson Hole and some very light economic data, check out about the first 9.5 to 10 minutes of the Futures Weekend Update Path Chat, which carries that information within it. Again, please hit like and subscribe if you like what we're doing, and we'll talk to you in the next Path Chat. Cheers, everyone.